I think gold goes not merely higher, but substantially higher. I think most investors' time frames are fictional. Will this occur by the next long weekend? Probably not, Daniela. Our response to gold has been shaped by 40 years of benign economic climate, with lower real interest rates, negative real interest rates, frankly, and moderated inflation. I suggest that 40 years is over.
Not many people describe the stark reality of the current state of the United States economy like Rick Rule, the president, founder, and CEO of Rule Investment Media. According to the veteran investor and speculator, investing in and owning physical gold is a necessity in today's world, not just to watch prices go up, but to avoid the many pitfalls of the fiat banking system. In a recent interview with Daniela Cambone of Stansberry Research, Rule predicts that the primary precious metal is about to have a major upside breakout. But that is not the chief reason why the veteran investor is advising everyone to invest in physical gold. According to Rule, the economic and financial health of the United States and many other developed countries like Canada, where Prime Minister Justin Trudeau expects the budget to balance itself, is close to complete ruin. To depend on these failing systems, Rule warns, is to leave yourself susceptible to the storm that is about to hit. In the United States, for example, so many things are happening simultaneously, and they all necessitate a quick change of strategy, from the uncontained banking sector crisis to the debt ceiling drama and terrible fiscal and monetary policies that consistently add to the nation's already massive debts. Rule believes the system is rigged to fail and advises investors not to get caught in the storm. Fortunately, there is an asset that thrives in such an environment. In his interview with Stansberry Research, Rule carefully highlights important reasons, in addition to massive price gains, why everyone must invest in gold. The veteran investor also discusses the danger of central bank digital currencies and why he believes de-dollarization is not the biggest threat to the United States economy. Before we listen to the insightful discussion and important investment tips, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. We would also love your feedback. Please drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Gold does well when people, as we've discussed before, are concerned about the maintenance of their purchasing power and other savings and investment assets. And people should be very concerned. I consider the quote in US dollar terms to be a floating abstraction, because despite the fact that it's the worldwide medium of exchange, the US dollar is a floating abstraction. I also note that against most currencies, gold is already in record territory. I think that if your listeners believe that we will return to real interest rates, which is to say that inflation will subside below the rate paid on the U.S. 10-year Treasury, that they don't need to own gold. I suspect that if your listeners believe what Justin Trudeau said, which is the budget will balance itself, that they don't need to own gold. I suggest that if your listeners believe that $32 trillion in on-balance sheet liabilities and $100 trillion in off-balance sheet liabilities being serviced by a budget and deficit as to $2 trillion a year is something that they don't need to be concerned about, they shouldn't own gold. I don't share a lack of concern about any of that. I think inflation is a problem. I think negative real interest rates, particularly as a saver, is a problem. I think the debt is a problem. I think the deficit is obscene. The consequence of that is that I own physical gold, a fair amount of it. I also own as investments big gold mining companies and as speculations little gold mining companies. I would prefer, Daniela, to look back at today, 10 years from now, and say all of that insurance, all of the gold I bought was for naught. Everything had a happy ending. Congress balanced the budget. Inflation came down of its own volition. The debt somehow magically got paid off. I don't believe in magic, so I own gold, and I think that your listeners should too.
Final thought, central bank digital currencies.
It's my worst nightmare, Daniela. The idea that with, in particular, artificial intelligence, governments can do what the Chinese are doing now, which is to assign a credit score, a social credit score, to their citizenry, and then control that citizenry's money by not having them have cash, but rather have a digital currency that the government can cancel at will. This is the worst possible nightmare. Can you imagine a world where Hitler or Mao or Stalin had access to this type of power with this type of convergent technology? Well, I wouldn't equate either Trump or Biden necessarily with Hitler or Stalin or Mao. I certainly don't want Biden or Trump or whoever the next person to accede to the presidency of the United States to have that measure of control over my life, their ability to monitor what I think, say, and do through artificial intelligence. The ability then to assign me a credit score based on my political correctness, and the ability, if they so choose, to cancel my savings, cancel my money, really is the worst of all possible scenarios.
Well,
Central bank digital currencies, or CBDCs, are digital forms of a country's fiat currencies regulated by the country's central bank. According to Atlantic Council's CBDC tracker, about 114 countries, representing 95% of the global GDP, are exploring a CBDC. 11 countries, including China and Jamaica, which recently launched Jamdex, have fully operational CBDCs. The tracker also estimates that over 20 countries, including Australia, Thailand, Brazil, India, South Korea, and Russia, intend to continue or begin pilot testing this year. With the New York Federal Reserve's CBDC experiment, Project Cedar, the United States has also moved from research to development. Despite the backlash, the world's governments and central banks are moving ahead with government-controlled currencies that would no doubt be used to silence all forms of opposition to government policy. Though Rule admits that might already be the situation now with credit cards and other electronic forms of payments, he warns that it is going to get much worse with CBDCs. During the interview, Rule also discusses the threat of de-dollarization and the possibility of certain countries uniting to end the dollar's dominance in international trade. According to Rule, there is a very slim chance of that happening, but that does not mean there is no threat to the US and the dollar. Rather than external, Rule believes the threat is internal.
I need to preface this by saying that I don't expect in the near or intermediate term any of these efforts will be successful in dislodging the US dollar as the world's reserve currency. We have, for all of our faults, which we'll get into later, the most liquid and the most transparent currency and security markets in the world. Our currency is freely convertible. Our finances, while bad, are described well. So we have lots of transparency. If you compare us with the competitors, Doug Casey famously described the US dollar as an IOU nothing, and he described the euro as a who owes you nothing.
That's right.
If the euro is a who owes you nothing, what would the BRICS nations be? Look at the financial transparency or the convertibility of currencies from, as an example, Brazil or Russia or India or South Africa. So I need to say at the outset that the efforts to replace the US dollar as the world's reserve currency will not bear fruit for a while. But let's look at the allegation by myself and others that the worst enemy of the US dollar, rather than being external, is from within. In the first instance, we are doing our very best to wreck the value proposition around U.S. Treasury securities. We're doing that because we're profligate issuers. We owe, on a recourse basis, $32 trillion to ourselves and other people. And by the way, off balance sheet through Medicare and Medicaid, another $100 trillion. $130 trillion in debt, and we promise to service this with a budget that's in deficit $2 trillion a year. You don't dig yourself out of a hole by digging deeper, which is precisely what we're doing. But Daniela, from an investor's point of view, a foreign investor's point of view, it gets worse. The value proposition is arithmetically unsound. we are proposing to pay U.S. dollar borrowers of U.S. Treasury securities 3.4% in a currency that we acknowledge, we, meaning the Congressional Budget Office, acknowledge is depreciating in terms of purchasing power by 7% a year. In other words, we solemnly swear to cost the buyers of U.S. 10-year treasuries 3.5% of their purchasing power a year for 10 years. No wonder foreign buyers don't want to subject themselves to a certificate of guaranteed confiscation, which arithmetically is what the U.S. 10-year treasury is. But it gets worse. We've weaponized the dollar. We have used the dollar's franchise. When I say we, I say it advisedly. Our Congress has weaponized the dollar. We have weaponized the SWIFT banking system. We have unilaterally imposed sanctions in an effort to extraterritorially impose our value and our politics on others. We may believe that our political system and our values are superior to other countries, but the countries that we're trying to impose them on obviously feel differently. And they feel, from their own point of view, that they have no alternative but to sell U.S. treasuries and look to buy and sell goods and services from other non-U.S. countries in mediums of exchange where the U.S. can't unilaterally interfere. So I would suggest to you that the enemies of the U.S. dollar are not Saudi Arabia. They aren't China. They aren't Russia. I mean, the Russian economy is, a gas station tied to an army. It's really inconsequential compared to the U.S. The damage being done to the U.S. dollar, the damage being done to the U.S. franchise comes out of Washington, D.C., and American citizens have benefited mightily from what de Gaulle called the exorbitant privilege of being the issuer of the world's reserve currency. All American citizens, all American taxpayers need to be concerned about the idiocy of the programs which seem inadvertently to be geared to the demise.
Whether the threat to the U.S. dollar and franchise is internal or external or a combination of both, the reality is there is a threat, and it's getting much too severe for the fragile, debt-ridden economy to take without some form of permanent damage. Like veteran investor Ray Dalio warns in his 2021 book, Principles for Dealing with the Changing World Order, we just might be witnessing the end of the U.S. dominance and the birth of another world power, or a shift towards a multipolar world. Whatever is coming for the United States economy, Rick Rule believes owning gold is the best choice for all categories of investors. What are your thoughts on Rule's analysis of the current state of the U.S. economy and the threat to its dominance? Are you shoring up on gold as he advises, or do you believe in budgets balancing themselves and trillion-dollar deficits evening out with more debt? Please drop your comments and observations in the comments section below. If you would like more interviews from some of the industry's brightest and most brilliant strategists, subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.